Hey everyone, what's up? It's Caitlin McKegg. I am your Phoenix real estate broker. Thank you for coming back to my channel. And if you're new here, welcome. I am here today to discuss our Monday market update, all about what's going on in the Phoenix real estate market. We're going to start by zooming out, talking about what is happening on a national scale, and then diving into what's going on in Phoenix. And I don't know. I feel like maybe the crash is over. Maybe all the drama is over. I'm not sure. I might be speaking a little too soon, but I do have some information that I want to share with you all that, is pretty interesting. So we're going to start by actually talking about new construction on a national scale. So let me get my screen up here for you guys. If you saw my video on Friday, I was talking about new construction incentives and talking about what's been going on with, especially here in Phoenix, all of the incentives that builders are giving out, and there are a lot. So this is on a national scale. Builders concerned about sudden pullback in new home market. It is talking about how there has been 1 in 5 home builders reported reducing their prices in the past month to increase sales and limit the number of buyers canceling contracts. There's signs of inflation's peaking, talks about what the economist for the National Association of Realtors says. But basically, long story short, builders are struggling to keep the demand up. And so they are starting to give a lot of incentives, and they are not continuing to build as many homes as they had planned. This also talks about the average cost to build a new home has jumped 35.7% since January of 2020. That's an insane amount to think about. Not surprised, but still a big number. This is another article. New home starts fall sharply. The whole housing sector is in a retreat. Wanted to share this one as well. Newly started single-family housing projects fell from a seasonally adjusted annual rate higher than 1 million in June to just over 900,000 in July. The 10% drop is the steepest so far this year, continues a sudden and steady downturn that has seen the rate of new single-family housing starts plummet by more than 20% since January. Again, this is on a national scale, but we are seeing the same thing happening here. All of the incentives, some price changes, and of course, the housing starts are declining. What we have done in the past, leading up to 2007 and 8, is we way overbuilt homes. We built way too many homes for the number of people that were here in Phoenix. And so since then, we've been trying to catch up. But now, with everything going on, I think builders are starting to pull back again. It's just interesting to see that kind of ebb and flow. So that's where we're at with new construction. Now, part of the reason all of this is happening, or pretty much the biggest reason, is demand has gone down because of mortgage rates. So let's talk about that. Demand for mortgages hits lowest level in more than 20 years. I feel like I've seen this headline already this summer multiple times. So nothing new, but this continues to talk about that again. Requests to refinance were down 5% week over week and 82% from a year ago to the lowest number or lowest level since November of 2000. Home purchase applications are held down by rapidly drying up demand as high mortgage rates, challenging affordability, and gloomier outlook of the economy kept buyers on the sidelines. The rates on a 30-year fixed mortgage have come down 0.5 percentage point from their high in June, woohoo, but are still 2 percentage points higher than a year ago, and even higher than less than a year ago. I mean, in February, rates were very low still. So we've seen such a big change in mortgage rates. That's why things have slowed down in the real estate market. Now, what I know from my sources in the mortgage world, last week wasn't the best week for rates. We didn't make a huge jump, but we didn't stay as low as we had been in the past. This is talking about for a 30-year fixed rate conforming mortgages, loan rates averaged 5.47%, up from 5.45% the week before. So a little bit of change there for the worse, but it isn't a big jump like we started to see as we got into the summer and all of this market shift. So let's talk about the market shift, shall we? Now, talking about Phoenix, I'm going to share with you guys a few things. We're going to start with the Cromford Market Index, and then we're going to talk more about some things going on with new listings coming to the market and the demand as it relates to how the number of homes going under contract. So talking about the market index, let's jump right in. Now, if you're new here, the Cromford report is amazing and they have lots of data that I follow. And one of their best things that they have is this Cromford Market Index, which helps us understand supply and demand in our market. So as you can see on the screen, any number between 90 to 110 is a balanced market. A seller's market is anything over 110 and a buyer's market is anything under 90. So we are officially in a balanced market in the Phoenix metro area at 108.9. And I think last week I was like, next week we'll be in a balanced market because we were at like 111. So here we are in balance. Our demand index is in the red at 79.3. So that means we're about 21% below normal for our demand. And we are about 72%, or we're at 72.8 for supply, which means that we're about 28% below normal for supply. So we're still below normal on supply, but we do have demand that is also below normal. And so essentially when this number and this number equal each other, we're in a balanced market. And although we're not exactly equal here, we're still in that range that indicates we are in balance. So congratulations to the Phoenix real estate market, finally in balance for the first time since February 17th of 2015. That is the last time the Phoenix real estate market saw balance. So welcome back. And keep in mind, every city is a little bit different. So right now we're looking at the larger Phoenix metro area. It's looking at all the data, listings, everything included in that. But when we look at cities specifically, the major cities, because the Cromford Market Index can only be done for larger cities that have enough data, we actually do have a few buyers markets. So our buyers markets right now, we have Surprise, Gilbert, Tempe, Maricopa, Litchfield Park, Buckeye, Queen Creek, and Santan Valley. All of those cities are in a buyer's market. So if you are looking to buy, you've got much more leverage in those cities specifically. If you are a seller and wondering why you can't sell your house for the price you want in those cities, that is why. So those cities are on the weaker side as it relates to a seller's market. Now, the remaining sellers markets, we've got Fountain Hills, Paradise Valley, Scottsdale, and Cave Creek. All those cities are still technically in a seller's market. So if you are trying to buy in those areas and find a deal, you may not be having a whole lot of luck because inventory is still really low there. And these homes are actually selling. So sellers are not willing to cut their prices or do things that they may need to do in other areas in order to get their homes sold. So keep that in mind. But let's talk about inventory because to take you back a few months, we saw a huge rush of new listings hit the market as the market shift started happening. And for most of the summer, we've been seeing a lot of new listings come to market pretty consistently. And we started to see the first signs of that slowing down in the last maybe 3 weeks or so. I think I've been talking about that. But now as we look back, we've actually seen fewer than 10,000 new listings come to market in the last 28 days. Now, if you can see here, I'm going to make myself a little bit smaller because this is, oh, now I'm in the way. I'm just going to go away and we're going to take this off. So what we have here is the number of new listings by month. And I don't know if Cromford gives us the ability to break this down further. So we're going to work with what we've got. But if we look back to the month of July, we had about 10,000 new listings come to market. In August, now granted, we're not through August, but we're already at the 22nd. We've only had 5,700-ish new listings come to market. So this likely is not going to reach the 10,000 that we saw last month. And the month prior to that, we were at 12,000. and 11,000, 10,000, 10,000. So if we don't get up to 10,000 this month, it's definitely a decrease in new listings as compared to what we had been seeing consistently before, over the last few months. Now, we did have new listings peak in terms of the number of new listings coming to the market, peaked at 12,246 every 4 weeks. So as we were counting the number of new listings coming to the market, that was kind of the peak of what we saw. And then the highest number that we've seen, or the lowest, I'm sorry, we haven't seen a lower number since April 21st. So that was kind of the turning point. After April 21st, we started seeing all these new listings coming to the market, and we were kind of hitting these records that we weren't used to. Now, when we look at the last 4 weeks, if we go back 4 weeks of new listings coming to the market, that weekly count is down 2.7% year over year. And if we look at the weekly total of how many new listings come to the market on a weekly basis, that number is down 9% year over year. So that's pretty interesting because last year our inventory was very low. So if we start saying that our inventory is now coming to the market, the inventory that's coming to the market now is lower than we were last year, we're certainly starting to see a change as compared to where we were at in these earlier months of the summer. Now, with all of that said, we've actually seen supply fall in a few cities. And what's interesting about this is these cities actually match up quite a bit with the cities still in a seller's market. So in Fountain Hills, Cave Creek, Maricopa, Chandler, Glendale, and Tempe, we actually saw supply come down and haven't been seeing that for a few months now. So is this the start of a new trend? I don't know. We all kind of assumed there would be a backstop, that there wouldn't be any more new listings coming to the market in such a rush, but I didn't know when that would happen, and we didn't know if it would slam on the brakes or if it would just kind of gradually happen. But for the past few weeks, we've started to notice, not as many new listings hitting the market. And that's kind of become a trend. And now we can measure and see a pretty significant difference between, like I was saying, those 4-week timeframes and 7-day timeframes. So this might be where we're headed next, is listings aren't coming on the market as much, what does that mean? If you're a seller, you have less competition. If you're a buyer, you have fewer things to choose from. That creates strength in the market from a seller's perspective. So that's less of that seller's market deterioration, less of us going into a buyer's market, and more of us either stabilizing or going back towards a seller's market like we had been in the past. So I don't know. Let's talk about demand though. Moving over to this listings under contract number, because this is how we measure demand. And we see how many listings are going under contract. You can look back here, back in Dreamland when we were in February, March, April, all of these listings going under contract. And this is, I believe, on a daily basis, I want to say, or weekly. I can't remember which one I pulled. I'm sorry about that. Daily. Yep. Daily chart. So, obviously this has taken a pretty big dip since May, June, July. July was awful. And now here we are starting to see a few little dots going upwards. And so when we look at the numbers for this, we've seen about 1,803 newly accepted contracts in the last 7 days. That's the highest number that we've seen since June 12th. So looking back here, this is probably June 12th right here, this dip somewhere in here. So this accepted contract number has actually started to come back up. The lowest, not the lowest, but where we were at on July 3rd was a pretty dismal place of 1,429 contracts accepted or listings going under contract. So again, this is our demand. It's the amount of buyers that are out there saying, I want this house and I'm going to buy it right now. And sellers saying, cool, I'm going to sell it to you. So the more of that activity that we have on a weekly basis indicates that we have demand out there and people wanting to buy homes. So we have increased that over the last few weeks here. And like I said, we're starting to see this climb back up. So this will be something to watch because maybe demand isn't dead. Maybe it's coming back to life. And that plus seeing the number of new listings slowing down, we've got to figure that might just kind of hold us at balance right now. Now, again, every city is a little bit different, so things can change city to city. But for the most part, I mean, that might be kind of where we're headed right now, is staying away from this throw into a buyer's market and kind of stabilizing around balance. This is a very, very early projection, which I don't like to do, but these are my very early thoughts of like, maybe this is kind of where we're going to hang out for a bit. So I don't know. What do you guys think? Put it in the comments. I would love to know. I can also say from my perspective and in my business, I have started to hear from quite a few more buyers than I had over the last couple months. So to me, just anecdotally, feels like people are starting to either make peace with the interest rates or just kind of deciding it's time. This is the market that we're in, and I still need to buy a house. So as a seller, this is really good news for you. If you have your house on the market, we might start to see more buyer demand and your competition might begin to go away. And as a buyer, it's still a good time to buy a house. You're not in that crazy frenzy of competition that you would have been in months ago, and you still have a lot of choices. And it's just more of a balanced environment. So if you've been waiting for a buyer's market, I don't know if we're going to get there. In some cities we have, but I just don't know if we're going to get there at this point based on what I'm seeing. I could be wrong. I don't know. But those are my thoughts this week. That is the data. I hope all of that is helpful for you. If you have any questions, check the description below. You can send me an email, give me a call, text, or set up a time to chat using the link down below. I also have free home valuation, search my MLS, a relocation guide. All of the goodies are down in the description. So check that out. And thank you for watching. And thanks for all your support. I'm Caitlin McKeag with the Desert Dreamers team at HomeSmart. I will see you guys again next week.